Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Folks, welcome back to Voro, where we dive into the world of markets and uncover the trends that matter. Today, we're talking about a potential Dow Jones pullback, and I've got my eyes on something interesting. The Dow Jones Industrial Average. It's been a wild ride lately, but one thing's for sure: traders are keeping an eye on its interaction with the 20-day simple moving average. Now, that might sound like a mouthful, but bear with me, because this is where things get juicy. The 20-day SMA, it's like a golden fence post in the Dow Jones price chart, and when it comes to this particular stock index, we're seeing some interesting behavior. According to my sources, stocks fell sharply in the early session, with losses peaking around 1 p.m. ET before a modest recovery took shape. By the close, all four major U.S. indices remained in negative territory, though the pullback was less severe than midday lows suggested. But here's the thing. The Dow Jones Industrial Average stabilized after closing 0.4% lower, and that's where things get really interesting. You see, folks, this is a classic case of support finding its footing. The Dow Jones found itself at the 20-day SMA, and it's like the stock market was saying, hey, we've been down, but now we're back. And that's exactly what happened. The selling pressure came to an end, and the market took off once again. Now, you might be wondering why this is such a big deal. Well, let me tell you, it's not just about any old SMA, it's about the 20-day one in particular. This level has held multiple times this year, and that's some serious technical validation right there. So, if the Dow Jones breaks out of these support levels, watch out, we could be looking at some serious gains. But here's the thing, despite all this excitement, I've got to mention a potential area of concern. Housing sales, you see, are still struggling. Existing home sales continue to lag even as prices edge higher, revealing a sector still under strain from affordability issues and tight supply. And that's something we're going to have to keep an eye on. Now, the stronger data has reduced the likelihood of near-term Federal Reserve rate cuts, which is just adding complexity to the market's outlook. For traders like myself at Voro, this interaction between the Dow Jones and the 20-day SMA is worth watching as a technical cue. But for investors out there, it's more about finding fresh catalysts to reignite that rally after recent highs. So, what does all this mean? Well, folks, I've got one take on it. While momentum in the U.S. economy is improving, equity markets may need something extra special to keep the momentum going. And that's exactly why we're watching the Dow Jones so closely, because when it breaks out of these support levels, watch out. It's going to be a wild ride. That's all for today, folks. Thanks for tuning in to Voro, and I'll catch you all in the next one.